Hello, everyone, and welcome to the first episode of Multipliers. I'm here today with Kaiser Geelani, the Chief Economist at Multiply Group. He's been at Multiply for over 8 years, and Kaiser, thank you so much for doing our first podcast with us.
Thank you for having me, Lama.
So, as an economist, can you give us an overview of the areas you focus on?
So, broadly, the focus is on guiding the group's macro strategy, which primarily involves a lot of studies on prevalent economic conditions, long term trends, risks we face, external risks, and then pinpointing geographic and asset class priorities for the group. And then under it, we do a lot of ad hoc reports, we do market studies, and there are several internal workshops as well we conduct over the year. Then it also involves supporting the investment team in assessing different opportunities, looking at companies from an external viewpoint, especially in markets which are more risky in emerging parts of the world. And then there's an element of thought leadership as well, wherein I communicate groups' views on external environment to external stakeholders. And there's a lot of engagement as well with institutional investors through various roadshows and other meetings.
Kaiser, can you provide us with an overall assessment of the state of the economy today?
I think global economy is in a much better shape right now compared to the start of the year when there was a lot of discussion about a recession happening. Inflation rate is clearly trending downwards, and although core prices are still high, and Fed in its latest meeting increased interest rates by another 25 basis points and indicated that there may be a bit more coming. But I think overall the interest rate cycle seems to be peaking, and we may see another 25 basis points hike this year, and then they may hold it for a considerable period of time. So I think, and then the new global economic outlook from IMF, it's much more positive than the previous outlook report they did. So overall, it seems recession has been averted, but there's a lot of divergence as well. When you look geographically, there are countries in Asia, especially, which are growing at a good pace, and they will take the economy forward this year. And then in advanced economies, it's more between 0 to 1.5% growth rate this year. Besides, if you look at a more longer term picture, I think it's very important to see this shift we have witnessed a decade of great moderation wherein we had a not so hot, not so cold economy. Credit was cheap, inflation was under target. So there was a lot of expansion in the economy. That era seems to be over, and we may have to live in a period where high interest rates, high inflation is a norm, and we need to see how business can navigate that phase going forward.
And as Multiply Group, how do you position us against this entire landscape?
Multiply Group is in a very strong position within this backdrop, both in terms of our current portfolio of assets and also in terms of our investment execution strategy. Now, if you look at our businesses, most of them are leaders in their industry. Despite several headwinds, supply side pressures, they have maintained good performance, very strong margins. So I think we are safe on that front. And then you see a bulk of our asset base is based in the UAE. It's important to highlight the characteristics of the underlying economy. And when you look at local economic dynamics, there's a lot of divergence. What's happening here and what's happening in the rest of the world. So last year, for example, UAE grew at the fastest pace in over a decade. And this year so far, numbers look positive, although there may be some impact from oil production cuts. But Abu Dhabi economy, for example, non-oil economy grew by 6% in the first quarter. Latest PMI numbers also show robust private sector growth in the economy. So I think this bodes very well for our subsidiaries going forward.
Absolutely. And if we zoom out a little bit, what challenges or risks do you see going forward for the global economy?
There are a lot of challenges. Some are structural in nature. We have seen them over the years, and some have been triggered or accelerated post-pandemic. I think I would re-emphasize the point I mentioned earlier on inflation and interest rates. I think once that starts to trend higher, it's a difficult situation for certain countries, certain pockets of the economy to navigate that. And then when you see some of those secular drivers of the economy like globalization, young population, those trends are either reversing or they're not growing at as fast as they used to. So these things are inflationary in nature, and at the same time, they don't really they were boosting a lot of productivity in the economy, which may not happen going forward. And then the $300 trillion debt, I think it is even bigger of a problem when you see record high interest rates. So for certain countries, there's a lot of distress. I think there was a report recently that around 70 odd countries globally are in debt distress, facing difficulty to service debt and having currency depreciation at the same time. You can see similar trends happening in the corporate world. A lot of defaults happening, especially in advanced economies. So balancing this in a high interest rate environment, how companies and countries will service this debt, it's an important challenge. And then lastly, I think the geopolitical situation is not obviously improving. There's a major war going on in Europe, and there's a technological cold war brewing between US and China, which obviously will impact everyone.
And if we can just flip to the other side of the coin and end on a positive note, what do you see are the future drivers of growth going forward?
I think when you look at the longer term themes, they are still intact despite everything what's happening around. You see trends in technology, you see a lot of focus on energy transition, a lot of focus on healthcare. These are more long-term themes, and there's a lot of policy support, a lot of private sector investment going into this space, which I think will be a key driver for growth going forward. And then if we look at geographic growth spots, I think emerging Asia, Africa will be a major pocket of growth, which will drive global economy going forward. And within this region, especially countries which have moderate levels of debt, which have good fiscal and monetary headroom to induce policy-driven growth, and countries which are less affected by internal conflict or external geopolitics.
Kaiser, thank you so much for being our first podcast guest.
Thank you. Thank you for having me.